Friends, welcome to my channel and thanks for watching this video. As we have ended with one more volatile week, welcome to another session of USA Weekly Market Report. This is going to be as interesting as the previous ones, and I've been saying one thing again and again, things are not at all looking good. Most importantly, whatever is happening in the geopolitical arena, understand one thing. If I and you as a viewer do not understand the geopolitics, then we can't expect analysts to explain the entire situation. What they are doing is telling about the current scenario and the possible outcomes. But beyond a certain point, nobody is going to see what will eventually happen or how deep the crisis would probably become, not only for the US stock market, but for all the major economies or developing economies, right? So you need to understand that. So there are various aspects which we are going to analyze and understand in this particular session and try to prepare ourselves for the upcoming week. But before that, if you haven't yet subscribed my channel, just hit on the subscription button. Also hit on the notification bell along with the all button to get my updated video notification. Now, so here we are. I think this is one of the interesting things that relying on sanctions to stop Russia could go terribly wrong, says Neil Ferguson. And what we have seen, Goldman Sachs predict what will happen to Europe's economy if Putin shuts off gas taps. So there are lots of things that has been happening, and these are some serious headlines. These are really serious headline because if you think that because you are a developed economy, because your currency is strong compared to other currencies, you can't do each and everything whatever you think. You need to see your resources first, and if you are relying on somebody else and trying to pull off his or her legs, then obviously you will be the culprit, not he or she, right? Now, on the backdrop of it, you need to understand what's actually going on. So rather than focus on the outcomes, you just focus on what's actually happening on the ground, and that will give you a much clearer idea what should you do going forward if you're looking at the stock market. So there is a direct correlation. You need not to forecast things. You just see what's actually happening on the ground. Now, let me show it to you what is there. And what's more important is there are some stocks or there are some such sectors where people are indeed making money. Now you need to see or look at those sectors. You can't stuck in a particular sector and continuously crying that I'm not making money in this sector is not performing. Obviously, market is not for faint-hearted. Stock market will never be, or in the past 100 or 200 years of history, it is never being for faint-hearted. And if you are lucky enough to enter in the market when something called a rise after a crash is happening, you will make a huge amount of money. What we have seen in 2020 and 2021, but beyond that, you will feel pain if you do not understand what's actually happening over here. Now, there are some other important headlines before talking about the market and the trends. So, Biden calls for an end to Russia's most favored nation trade status. So the problem here is if you are sanctioning, if you are stopping one country which is one of the major global exporter, not only in energy sector, gas sector, but also in agro commodities, in that case, you need to prepare yourself, before actually hurt others. You need to understand what will be the consequences which you have to face if you do these kind of things, and you better be prepared for this. And let us see, because this is a fact or the truth that inflation is going to, and more specifically the commodity which is food and non-food inflation is going to this is just the beginning as of now. This is just the beginning, and this is happening because of the bad policies or one-sided policies. If somebody is saying that this is he's saying wrong, then the next person will say the same thing. And whatever I have said about focus on the current situation. So just read this headline. Okay, 11th March, 5:07 a.m. EST, and you can see the headline: satellite images shows large Russian convoy regrouping near Kiev. So what's actually happening on the ground? And you can clearly see in the image, these are fields. Okay, these are fields. Okay, probably they have been used for agricultural lands. Now things are completely different. So what's happening on the actual ground is really important before talking about perception that things are going to, as a stock market, we need to understand what is happening. You can't be over bearish, you can't be over bullish. Right now, you can't be over bullish, right? Now, on the backdrop of all these things, one thing is very clear, which is markets are not looking good and the stabilization is not yet happened. Now, in this series, I will also show you some of the charts from European market. It's better to focus on European market as well because they are putting things without understanding the consequences. They are pulling Russia back, that's fine. But the dependence on other countries on Russia is extremely high. Okay, so let us first see what's happening, and then we are going to analyze or reanalyze things one after another. So here we have Dow Jones 229 point down as of Friday, Nasdaq 286 point. This get impacted the most, 2.18. Then we have S&P minus 55, which is 1.3%. Gold is flat. I can see $2,000. Oil is also flat. There are some corrections like $5 or $10, but it is flat. Bond yield, 10-year bond yield is, after moving up and down, it is close to 2%. Then you have VIX, which is steadily trading at 30, and this is one of the longest times where we can see VIX is sustaining. So this is an indication. You need not to be an analyst or you need not to listen what people are saying. You just see the data and it will tell you the real story. VIX is not moving below 30. This is a clear-cut indication that things are not stabilized. Whatever, whomsoever, whatsoever is saying, it does not matter. If I do not understand the market, nobody understands the market after 40 or 50 years. And that's why it's our duty to read and create knowledge or get knowledge from whatever sources are possible. And this is one of the toughest job we have to do, because we have to keep on learning things. There is no way out to sustain in the stock market. You have to be persistent with your knowledge, with your research, with your analysis, with your investment, irrespective of the market condition. So there is an indication that VIX is not stabilizing or it is not moving lower. So this is an indication that volatility is going to sustain. As you can see, these are all stock symbols which are down. Commodities are making new highs, whether they're talking about RBOB gas, natural gas, talking about silver is flat, but it has broken out from a very deep range. I will explain it to you. Then you are talking about copper. Copper has lots of volatility. Wheat, this is one of the things. I will show you the chart of wheat, because of this wheat, because of wheat, we will see sharp rise in agro commodities, right? Then we have US dollar index, which is trading at 99.13. So this looks very strong. So you have lots of negative things and they are sustaining. If stock market moves one day or 2 days, it does not mean that the trend has changed. So let's first look at the chart of wheat. I hope there is a chart for this. Yes, we do have. And let us see. So if you are looking at the wheat chart, in the last couple of years, as you can see from 2016-17, you can see it was trading near $300-400. Right now it has made a high of $1,300, currently trading at $1,100. So in every aspect, this is extremely high. This is extremely bad, not only for a specific country but overall. I think globe. It makes sense beyond the stock market, because when you will eat and you will feel the heat in your pocket, then you understand what's actually happening. So some people are just talking about anything without understanding. I don't know, they do have the understanding of the consequences, or they're just simply saying based on their own personal profits. I don't understand that. But the thing is, these things are not good, not at all good, and you can see, you'll definitely feel the pain. Okay, even for exporting countries where the wheat is in abundance, they will also feel the pain. Everybody is going to feel the pain, and Europe is one of the biggest beneficiaries from Ukraine. And right now, Ukraine's primary focus is not on farming. The primary focus is to save their country, right? So Europe is definitely going to face the heats, and that's why you can see there is huge amount of fall in European markets rather than when comparing to the US market. So I just before looking into the charts of Dow Jones or Nasdaq, or the US centric metrics, just look at or spend some time on European charts, so DAX, FTSE or CAC. And if you are looking at the chart of DAX, let me show it to you. So this is the DAX, and this, you can see the long-term chart. And more importantly, just focus on the trend. Okay, just simply focus on the trend. The momentum is completely on the downside, and there is a reason behind it, because those who put huge amount of money, they understand what will be the issue if things are going from bad to worse. So this is a chart of DAX, and this is a very simple chart. You need not to do extraordinary analysis for understanding this chart. So what do we have here? So on the upside, you have 16,937 for DAX. This is German DAX. And on the downside, you have a support of 9,900 or 10,000. So in DAX, you can see the current close is 13,628, and we have 2 or 3 more thousand points to look at on the downside, where it can see some support. After that, if you are looking at FTSE, let us see. So this is when you don't understand the consequences and you simply do what you think is good. When you think that something is good without understanding the consequences, then you will also feel the pain. If you're talking about FTSE, it has not performed as bad as DAX, but the overall trend is not at all looking good, because there is a clear-cut resistance at 7,731 and 7,900. So let us see how it is going to perform, whether this will sustain above 6,700. So this is your next support. 6,700 is going to be your next support. Let us see whether this will sustain or it will go lower. And then I think one more, we have CAC. Okay, so we have CAC, and here we are. Let us see the indices. CAC index, yes, CAC 40. Here also the momentum is shifting. The clear-cut shift in the momentum is visible in the chart, and if you think that nothing is happening, then you need to believe, or you actually look at the chart and believe what the price or the trend is saying. You can't be blindfolded and you're saying that nothing is happening, everything is fine. Europe is going to feel the heat. It doesn't matter who is winning, because their supplies have majorly, you know, you got hurt with food, you got hurt with energy. Now, what is left? These are the two important things for Europe's survival, because Europe is a cold country, so you need energy. And if there is a resistance or stop, or if Russia started taking big actions, then there will be a problem. So you better understand, and this is just from the perspective of what is happening as far as the charts are saying. So in CAC 40 you have 7,026 and 6,219, which is going to be a resistance one. Let us see whether it will sustain or not. If it does not, then you have a big downside which is yet to be seen. Now let's go to the US index and let us see what Dow Jones is saying. So if you are looking at the momentum, I have been saying this since 36,000 that the trend is on the downside, okay, and this is clearly visible as far as the momentum is concerned. So let me zoom this chart and so there is no change in the trend. I mean, 1 or 2 days or even 1 week or 2 weeks of short covering does not change the picture, because trend is highly volatile and you can clearly see what's actually happening over here. So this is what we have here as far as the trend is concerned, right? And this is how the trend looks like. You need not to think or overthink on this, because this is what it is. This is the simple trend, and this is what the chart is showing. And for Dow Jones, it is clearly visible that the price action or the support we have is in between 27,200 and 29,000. That's where we get some respite. As far as Nasdaq is concerned, because the valuations are extremely high, and whenever the dollar index looks strong, Nasdaq is going to get impacted. And that's what we can see over here, that Nasdaq. So this is the price chart of Nasdaq, and Nasdaq, here we are, and it is very clear, it is very much clear that things are moving on the downside, and we have way to go. And this is, the correction has not yet ended. As far as the levels is concerned, you have 10,500, but if you are looking at the big support, it is in between 8,420 and 9,986. So this is how the trend looks like. So things are not at all looking good. It doesn't matter if you can see 1,000-point move on the upside. This will simply be a short covering and nothing more than that. Now the next chart would be the silver. Silver is, it's not getting enough momentum, but the chart. So this is the weekly chart of silver futures, and the most important thing is it has made a breakout above 25.5 or 25.55, 25.57, and it is sustaining above that. It went up to 27.4, 27.5, but if it continues to sustain above 25.57, the next 2 or 3 targets that we are going to look at. So here we are. The next 2 or 3 targets will be 29.12, then we have 30.17, we have 30.8. So these are going to be the next 3 targets as far as the silver future is concerned. So there is nothing that has changed as of now. Now the 2 important chart which I'll also show it to you. The first is the dollar index, and as you can see, I have been saying about this, because European currency is going down, it will give enormous strength to dollar, because for dollar 55%, because dollar is a basket of currency and Europe constitute the majority of it. So if European currency goes down, dollar will eventually move higher. As you can see, as far as the dollar index is concerned, as far as the overall price chart of dollar index is concerned, so this is what we have here, and we have 99.78, which is our next target, and the two big targets which we are going to look at will be 103 and 103.8. so this is how the dollar index currently looks like. Most importantly, if you are looking at the VIX, and this is the single most important data point which one must look at, and it is saying that it's going to sustain above 30, at least for the time being. And if it does, if it sustain at the similar levels, let me tell you, this is not going to be very easy for the stock market and not easy for others to make money. So 28.9 on the downside you have as your support level or the stop loss if you want to see VIX, but there is a possibility for VIX to move towards 48 and even 53. So there is a possibility if it continues to hold above 28.9. So things looking extremely volatile. We have lots of things to do. We have we need to see how market is going to stabilize. But as far as the long-term charts or trend are concerned, the big support levels are way far than when compare it to the current price. So let us see how it's going to move. Don't take overheated position. Don't don't be fully invested right now if you haven't yet. If you are fully invested, that's a different thing. But if you want to invest, then understand the current market mood and go with an SIP route where you're going to put some amount of money right now, some amount of money after 15 or 30 days, then again after 30 days. So this is the correct way to analyze or put money if you want to in this current market, and it will take time. It will definitely take time. So this is the end of the video. Thanks for watching.